Cool. So, looking into today's bias, we've already swept London highs, a point of London highs, but hold on, I need to turn these Discord notifications off because it's gonna really, really annoy me. Oh, I don't even know. I'm not gonna do it now. I'll do it another time. But yeah, so for now, what we can see is we've already swept London highs. However, I would potentially want to see another sweep of this high right here coming into the session because we still have around 25 minutes till the macro. So we'll see what the New York Open says, because basically the New York Open is at this time, so 9:30 New York local time or 2:30 UK time. That's it right there. So the New York Open's in around 6 minutes, and basically because the New York Stock Exchange opens at 2:30, it injects a load of liquidity into the market because the stock market isn't even open yet. So once the stock market opens, it starts pushing in volume into the market, and then that's why we trade the New York session, not the London session, because it's so much less volatile. More volatility means faster price movement equals the faster you'll make money, and also lose it. But we don't lose money around these sides supposedly. I mean, the last 5 trades have all been break even, which has not been great, but is what it is. So we're just going to be patient now. And for anyone who is new, so I know we've got 2 guys in here who are pretty new to this right now. So what I basically look for is I look for one of these levels to get swept. So it's similar to like support and resistance, but you know, they're just rebranded to liquidity levels. So you're looking for session liquidity. And what session liquidity is it's simply the high and the low of each session. So the highest point of the Asian session, and then the highest point of the London session, and then the lowest point of the London session, and the lowest point of the Asia session is what you'd mark out. But in this case, this would be the lowest point of the Asian session, but it's already got taken out prior to 2 p.m. UK time or 9 a.m. New York local time. So therefore, we don't have an Asia low level, even though if you scroll up on the chat, there'll be other days where we previously have had an Asia low because it hadn't been taken yet before this session had even started. So right now we have equal London lows, and the difference between equal London lows and just London lows is equal lows are they're a lot more high probability for price to target. So if you have an equal level of highs, so right here, or equal lows is what I mean. So right here we have this low and this low. So if we were to get in for a short position, I mean, I'm not going to get in right now, but in theory, hypothetically, we're in a short position, there is a high probable chance that we're going to target equal London lows. Because if you have experience, or even if you're new, just equal highs or equal lows are high probability draw on liquidity. And what draw on liquidity means is the nearest point that price wants to go to, because price is always targeting highs and lows. Oh damn. Oh yeah, Kava, yeah, I'm just reading chat now. Yeah. Yeah, so on NQ we have equal lows marked out at 21713. You guys can see my screen, yeah? Can you guys see my screen? Am I streaming, or have I just been talking to you guys? Oh no, my screen is up. Oh, okay, go on. Alright, cool. So bias for today, the reason for my daily bias being bearish is because firstly, on the daily time frame, they are not equal in MNQ. Yeah, so that's why you would use for trading view, you would use NQ, and then if you're trading on, for example, top step, or so for example, I trade here on top step X. So I would trade with micros, but I do my analysis on NQ, because the difference between NQ and MNQ is obviously NQ is the main data provider from the CME group. So you see where it says CME, that's the exchange that futures trade off, which is located in Chicago. So you have the stock market from the New York Stock Exchange. Here we have CME, which is from, it stands for like Central. So I don't even know, but it's a Chicago. It's a Chicago board, and basically Nasdaq will provide like fair value gaps or levels that micro Nasdaq won't. So that's why like some people when they trade straight off MNQ, they'll get stopped out at break even. But people who trade on NQ don't get stopped out because price didn't reach that point on NQ, but it did on MNQ. There's like literally a slight difference. So that's why I analyze on NQ and not MNQ. But on Top Step, I'll take my trades on MNQ. But it's simply like, for example, okay, we have this fair value gap. In some examples, before we've had this gap will not show up on MNQ, but it will show up on NQ. So then when price comes down and taps into it, and if you're trading on MNQ, you wouldn't be able to see that. So let's say that's your entry point, and then it runs higher, and then hits your target. You'd be like, oh damn, why does it actually hit my target, but there's no fair value gap there? But then you look on NQ, and the gap is actually there. So that's why you trade on NQ. Well, analyze on NQ and not MNQ. And if anyone's confused what I mean by MNQ, oh, why has it done that then? MNQM25. There we go. Bro, what is it doing? Oh, there we go. Okay, cool. So this is MNQ, and then this is NQ. There is literally no difference whatsoever. The prices are a little bit different by like a tick. But there will be like instances where one will move faster than the other because there's a different price. So this says 824. Like you're literally, if you can't really see it at the same time, but it moves just like by a point different. There'll be a point difference with that. So we're making wild bullish SMT on the 1 minute. I'm actually going to mark this out as London highs. Can you tell me what price the SMT's at so I can take a look? Because I'm not exactly looking for anything as of yet. So there we go. That is 230 now. Can you guys see that spike? As soon as we've hit 230, how big that spike is? That is the New York Stock Exchange opening. And we're now going for this high, the new London highs here at 21868. So price will be going for that and manipulating higher. So, I don't pronounce your name, but so Cav, is it alright if I call you Cav? I don't know. Whatever you prefer me to call you. You use AMD, right? So accumulation, manipulation, and distribution. So in this case, this would be our accumulation right here, because accumulation is basically consolidation. It's just moving sideways. Then this right here will be our manipulation. So that's why we don't trade straight off 230 and we trade at 245, because that's when the start part of the New York Open is very manipulated. It's a very manipulated phase of the New York Open. So then once we hit 245, that's the macro session, and that's where the highest probability trades are likely to play out. So that's why we wait. So now I want to see London highs get swept on either NQ or ES. So there we go. We just taken London highs. So London highs just got swept. What am I putting here again? Yeah, London highs. There we go. So we're looking for London highs to get swept. And oh, I just realized why I was thinking, why can't I see this SMT? It's because I'm not even on ES. It's still on MNQ. Yeah, there we go. So yeah, we do actually have an SMT now. So what an SMT is basically when one asset takes the high and the other one doesn't. So you guys can see right here, we have London highs, which has got swept, but then the London highs on the right hand side hasn't got swept, meaning that ES is the lagging asset. It's the weaker asset. And supposedly, if you were to take a trade, you would take it on ES because it's the weaker asset right now, because it's not strong enough to go and take out London highs. but we only take trades on NQ because NQ is just overall a lot cleaner and moves. It just moves cleaner than ES, so I've always taken my trades on just NQ. So the SMT, the way you draw it out would be from this point to the high there. So that'd be the SMT, and then you have the SMT right here. So as of right now, when you're formulating your trades, you want to start from the daily bias. So your daily bias for today it's bearish, but just because your daily bias is bearish does not mean you only look for short positions. You don't want to fall in love with your bias because we're trading in such a small period of time. Your bias can switch in a matter of seconds depending on what's getting taken out. So at the moment, we've taken out London highs, so we have a bearish bias, which is also in line with our daily bias, which is also bearish. So if we were to take shorts, it is a high probability trade. But if we came down now and took out equal London lows, our bias would then switch to bullish because we'd then be targeting Asia highs or buy side liquidity up here. So we have London lows down here. So you guys can also see we would have a bullish SMT. Well, we have a bullish SMT before we took out this, because this line, can you see this is the same line right here, how this one has come down and matched it. So that's the equal low, but we don't have equal lows on ES. So at the moment, ES is the lagging asset. And then the same thing, likewise, for this bearish SMT. NQ's taken the high, but ES hasn't. So it is the lagging asset. So the macro starts at 2:45, or, well, UK time, but 9:45 New York local time. And we're just going to wait and see what we get. So currently, now what I'd want to do, because we've seen a sweep of liquidity, I want to see this short-term high. So after you sweep buy-side liquidity or sell-side liquidity, so in this case we have buy-side liquidity, I want to see a level of buy stops getting taken. And what buy stops are is when you enter for a trade. So a lot of people, they would have entered for shorts just here, just from the sweep of London highs, and they'll put their stop loss at the previous high. So the previous high in this case will be this point here at 21873. So that would be your short-term high, and that is where buy stops would basically be lying. And what I mean by buy stops is that's where people place their stop losses. So price will want to manipulate higher, take out those stops, and then you'd want to see a displacement lower to then look for shorts. So it looked like something like this. So we formed the short-term high, we've come down lower, now we want to take out the short-term high and move lower for a displacement, back into an imbalance, and then look for shorts. That is what the model, that is exactly what the model looks like. And I'll show you guys on the weekend, if you're hopping in the backtesting session, many examples of that playing out. And that is what the ICT 2022 model is going to be. So if anyone has any questions, plot it in the chat. How do you choose your short-term highs? So it's simply after we've had a sweep of liquidity. So you can see here, right, you're not marking out any short-term high. There's nothing there, nothing there. And this isn't a high, because obviously a high consists of one bearish and one bullish candle. Right here, we have a bearish and a bullish candle, but this bullish candle hasn't formed yet. Once we have the next candle form, bang, now it's a high. That's the first short-term high that's formed after we've swept London highs. So you'd mark that out as your short-term high. And you want to do it to what's relevant to price. And just because that's your short-term high does not mean it will always remain your short-term high. If we then were to form another one, so in this case, we have another high that's formed right here. That would be your next level to put your short-term high. So you don't want to just keep it in the same place, because you want to keep things very simple, and it's simply in the name, short-term high, the most short-term high. Obviously, you know, you have London highs, which would remain London highs because that's the highest point of the session. But a short-term high is very 1 minute time frame. So it's just the most recent event. What prop do I use? So I use Apex and Top Step. But I haven't been using Apex as much because they denied my last 2 payouts, which were worth like 4K. I know another guy that I follow. He had like a 200k payout and they denied him. So some prop firms can be real scammy, but Top Step definitely number one. Number one. All right, so whatever you do on NQ, by the way, you want to repeat the exact same thing on ES. So in this case, we're going to mark it out on ES. So you guys can see how we're formulating the setup. So we've had coming into the session at 2:30, we've had the manipulation higher, swept London highs, come back lower. Now we want to see a sweep of buy stops, so a short-term high, and then we want to see a market structure shift lower. But the sweep of the short-term high is not always essential, depending on how price is moving. But in this case, because we're very choppy, what I mean by choppy is we're just moving very sideways. I want to see this high get swept and then see a move lower. So you guys can see right here now, ES has just taken that short-term high, but Nasdaq hasn't just yet. So Nasdaq's actually at the same point as London highs. So there we go. Actually, I'm going to put this back to here now. All right, cool. So we've now got a solid sweep of a short-term high. Wait, I'm going to see if he comes back in, because I'm not trying to repeat this shit again. Well, I mean, I can, but oh, fuck it. So we've got a sweep of a short-term high on ES, and now we've swept the short-term high on NQ. So the next step now, after sweeping London highs, come back lower, sweep of a short-term high. So I literally showed you guys before what it is we're looking for. Come lower, come back up. Now we want to see a shift lower than a short-term low. So vice versa, as to have you have a short-term high, you also have a short-term low. So in this case, the short-term low to where price is now would be down here. So that would be the short-term low. But instead of marking that out as a STL, you'd mark it out as a displacement. So you'd want to see price displace. So what a displacement is it simply... Hold on. Just give me a second, guys.
And I just left your call for a second to record this voice message. The reason why I asked, what's your prop firm? Listen, I live in Russia, as I already told you. But so I have a code. I have a promo code for a free account on Apex. It's any account size, whatever account size you choose. I can't use it because they don't accept my passport. They don't accept Russian clients. So if you want, I can give you that account. Me and you can decide or whatever. Basically, but I don't need that account. I can't use it. So I just have the code. I was gifted it by a person. So I can just give you the code, the promo code, for you to use it for any of your accounts, whether you want 100k or 300k, whatever. It's gonna be free for you. So yeah.
Oh, damn. I don't know what it is, but I feel I need to take a shit so bad, but I cannot because the macro is actually starting in 4 minutes. Alright, cool, he's back. Yo, Cav, can you hear me? Yeah, alright, sweet. Okay, so you remember I told you guys, well, I told you, well, them two saw, but you need to see now. So we came lower, and now we then took out that short-term high, so you guys can see now. We came lower, took out the short-term high, and now I want to see what's called a displacement lower through the previous short-term low. So vice versa, as to how you have a short-term high, you then want to have the most recent short-term low as your displacement. So right here, that's the short-term high. This would be the most recent short-term low, because this isn't a short-term low. That's not the short-term low. This right here would be your short-term low. So instead of marking it out as STL, because we have STH up here, you mark it as displace. Because what a displacement is is it's a market structure shift. And what a market structure shift is simply a shift in market structure. And why you need that is because currently we can see that price is moving up. So any person who is beginner to trading and was just completely new to trading will think, oh damn, we're moving in an uptrend, so price has to move higher. Let's enter for buys. But no, our bias is looking for shorts, but we need something to tell us that we're going to move lower. And the way to find that is when you see a candle close below a short-term low. So when you have a candle, right? Yeah, this is a candle. So these candles here, they're called candlesticks. Then you have like the lines coming out of it. So the lines coming out of it are called wicks, and then the body is called a candle. And you want to see the candle close below the low, not the wick, the candle. So for example, let's just let me just define a quick example. All right, so you can see right here, right? If I was to mark this as a displacement, can you see how price comes down lower, but then the candle closes below, but it's actually the lines, like these wicks are closing below the lines? That is not a valid displacement, and that is why if you were like, oh yeah, that's a market structure shift, let me enter the shorts real quick, you would have got absolutely destroyed. You would have got absolutely bummed. Look at that. But if the candle closes below it, the actual body of it closes below, then it's a valid market structure shift, and then you can look for a position. So currently right now, price is still just chopping about. We just swept London highs on ES. So I'm just going to put it in the group now. So now we have a new short-term low that's fallen. So like when you're marking out your 1 hour, your short-term high, you're then marking out the most recent short-term low. So you then move your displacement up to this point here. That would be the point of where you want your price to displace. So I'm going to move the short-term high up to here. And I want to see displacement lower than this point on ES. So vice versa, as I said, you need everything to happen on the left-hand side and the right. If price displaces on NQ but it doesn't displace on ES, you're not taking that trade. But if price displaces on both NQ and ES, then you can take the trade. So you need to see everything happen at the same time. We are inside a 1 hour order block. Yeah. Also reacting off that 1 hour bearish gap as well, but yeah, I can see it. I can see that. So let's see if we get displacement lower and see if we get any trades. So at this point, we just gotta be patient and wait. Anyone has any questions, drop that shit below. So in 13, 14 minutes, this 15-minute will close, and then we'll have a 15-minute bullish fair value gap. So when taking trades, if you're inside of, let's say, if you're looking for shorts and you're inside of a 15-minute bullish gap or a 5-minute bullish gap or any sort of bullish gap above the 1 minute time frame, well, above the 5 minute and above, then you're going to take it with half size, because that is you have what's called A plus and B plus models. So when prices when you have a fair value gap on the 5 minute and above trading it against your trade, that is a B plus model, because there is a confluence going against your trade that could potentially make you lose. But if you have all the confluences ticked off on your checklist and there is nothing going against your trade, then that is what's called an A plus setup. And then you'd use that with full size. So my full size at the moment is 4 micro contracts. And then if we were inside of a fair value gap going against my trade, then I would take it with 2 micros, because that's 50% of my position. So you're risking half because it's less probable to work out. Alright, so we no longer have this SMT because both highs have now been taken on NQ and ES, and ES has actually formed equal highs on London highs. So let's see what we get. This at the moment is looking pretty clean. What price is doing right now is it's currently creating structure, so it's building structure around this point of liquidity. And how we'll do that is we'll just move higher, move lower, move higher, move lower, and eventually you'll see one energetic candle come through this short-term low, which is where we would want to see our displacement. But we could potentially be going to target Asia highs at 21894. So we're inside macro now at 240. So we've been 3 minutes into the macro. The macro ends at 3:15. So you just got to be patient and really see what opportunities you really get. Because at the moment there is absolutely nothing to take here, and you just want to be patient. Patience is absolutely key. But yeah, for the time being, I'm just gonna mute my mic because there's nothing really to do here. But if you got any questions, then just drop it below. But in the meantime, just chill, and yeah. Cool, so we're starting to see a displacement lower now on NQ, but currently no displacement on ES. So let's see if this candle closes like this. If we close here, then we'll currently have a breaker block because this short-term high didn't get swept. So we're currently trading into, yeah, we're not trading into anything, so this is looking good. Wow. So we got displacement between NQ and ES now. So there you have it. That's what I was talking about. The large candle move lower to displace through the short-term low. So we just had that happen now. So let's see if we get this 1 minute bearish gap. So for this to be a valid setup, there has to be a fair value gap on both NQ and ES. So if this closes up, I'll not be taking this. At the moment it's looking good. Alright, so once we get a tap off this 1 minute bearish gap, I'm going to be getting in for shorts. So ES has tapped the gap, but I want a fill on NQ. Just got to be patient at this point. This is where discipline really comes into play. So we're literally a few ticks off getting tapped in, but now I'm not going to get in at this point because it would ruin my risk to reward. So we're not going to run a 50% tap because it's a valid stop to the high. I'd only run it if it wasn't a valid stop. So this looks like it's going to run without us. We're literally 2 ticks off getting tapped in. Alright, so I'm in for shorts there. Stop at this short-term high. TP at the New York Open price. So now you just gotta be patient, wait for price to unfold. If you get stopped out, you get stopped out. If you don't, then you just gotta let price do its thing. So break even will be at this first short-term low if we get to that point. And then our stop loss is at the first short-term high, and then the TP is at the New York Open price. There we go. So let's see how this trade goes. So when coming to taking trades, you cannot be second guessing when taking trades. If it is a valid setup in your plan, that is a trade you have to take. There is no ifs or buts. If you're hesitating when taking entries, that is simply because you're either using too much size on your position, or you're simply just not confident enough when taking entries, and you shouldn't be on either funded accounts or using real funds, whatever strategy is you're using. So in this situation, ES could potentially go up to take the short-term high up here, whilst NQ lags behind to then move lower. But obviously if they both move up, then they both move up. But that's the scenario I could potentially see happening here. We've also got this fair value gap is paired with a 1 minute breaker block. So fair value gaps, you don't want to just take any random fair value gap. You want to take high probability fair value gaps with actual context. So a fair value gap with context would be a breaker block paired with this gap, so you can see how the breaker is going through the fair value gap. That's how that would be a fair value gap with actual context. So you guys can see how I've told you how it's unfolded. So we've manipulated higher, taken out London highs, had the short-term high. We've taken out the short-term high, we had originally had a short-term high, it went up, took out the short-term high, moved lower, then took out further stops, and then displaced lower, that's the displacement, and there we go. So we've hit break even now, so this is now a risk-free trade. So if we get stopped out break even, it doesn't matter. If we run to final TP, this is completely risk-free and break even. And the reason why you're break even here is because price has taken the first short-term low, but ES hasn't. So this is now valid to move up higher and potentially continue higher. So you want to completely take the risk off, and now it's just a completely running free trade. Because, sorry, I didn't actually explain why you then moves higher. It's because it's a bullish SMT. Likewise, how we had the SMT because NQ initially took London highs and ES didn't. We now have, you see where it says break even, price is taken break even, but on ES we haven't taken it, so it's a bullish SMT. So let's see if we get stopped to break even for the 6th trade in a row, or we actually go and hit a TP in the last week. And there we go, stopped to break even, and we're out that trade. So didn't lose anything, didn't make anything, and that is why you gotta set up your risk management. So this is now plausible to move higher and potentially go for 21894. But if this does then want to move lower, it could potentially do that. So that is my sixth trade in a row being stopped at break even. Holy. And yesterday, actually, I got stopped at break even. It ran straight to my TP. So I swear to God, this looks like it's gonna potentially run lower again, which would not be too great. See how price unfolds. But yeah, I hope you guys have enjoyed seeing the process of actually taking a trade, the patience, waiting for the different sweeps and everything to happen. So I literally told you exactly how price would have unfolded, and then I was patient, didn't rush my entry, waited for the gap to get hit. We got tapped in. I actually got in with a little bit of slippage, so I actually got in. It's actually stopped me out completely to the tick. It didn't even go back to fill the fair value gap. I got stopped out with a bit of slippage there. I can't believe that. 6 break-even trades in a row. I've never seen anything like it. And the thing is, right, just because you're in profit, anyone who has no idea of what they're doing. So there you go. That is why we keep our stops to break even. Because now, if you had remained the trade as it is, we would have originally got stopped out and lost the trade for no reason. So that exactly is a reason why. So there we go. We've now taken out 21894, and that was the two different scenarios which should have happened there. We could have either gone up to take out Asia highs and get stopped to break even, or we continue lower to the New York Open price, which is at 230. So now that we've had a sweep of Asia highs, we can now our bias is still going to be bearish. So we can look for another opportunity for shorts, but it's unlikely in the next 8 minutes will actually get us set up. So then you wait 30 minutes for the second macro, which is at 3:45 to 4:15 UK time, or 10:45 to 11:15 New York local time. So I'm just gonna send these all forward them now into the main group. Six in a row is crazy. That is the first time I've ever had that in my trading career. 6 break-even trades in a row, which is mental. But that's the thing. Some people are like, oh damn, you should have, you stop moving to break even so soon when it goes and hits TP. But then when it goes and absolutely destroys my original stop loss, they're like, oh yeah, good risk management, good risk management. That's why you don't listen to what anyone else has to say. You don't care about what anyone else has to say. It's you and your journey, which is why when I'll teach you guys one-to-one, it will be solely focused on what you guys need to improve on, what you need to do, and you don't have to worry about what I'm doing. You just focus on you and your own journey, because it's you against you. Who gives a fuck about what other people are doing? You want to focus on your own journey, because when other people's opinions, when I used to stream for free a year ago on YouTube, this is when I wasn't as confident, I would have people coming in my chat being like, oh yeah, no, you shouldn't take this trade, this and that. So it would get in my head, and I'd listen to them, and it would be horrendous. Bad things, bad things. Actually, okay, hold on. I just need to lock in real quick. I'm just gonna send these into the group. So I'm gonna get rid of this, but before I do that, I'm just sending the screenshot into the group. All right, cool. So, can anyone tell me what we're gonna mark out now since we've taken out Asia highs? So remember the first thing we did that we mark out once we take London highs. Does anyone know what we do once we take out Asia highs now. If no one puts anything in the next 10 seconds, I'll just say it. Yeah, so we're going to mark out a short-term high, which will be this right here. So I'm gonna get rid of all this shit here. We can get rid of London highs. Actually, no, I need to keep it for now. Alright, cool. So now what we've seen is price has come up and taken out Asia highs, but we haven't taken Asia highs on ES on the right hand side. So can someone tell me what would we have and what kind of, yeah, can someone tell me what we would have right now? Yeah, so we've currently got a bearish SMT between NQ and ES. So ES yet again is the lagging asset. So our buy is still going to be bearish, but we have 3 minutes currently left in the macros. It's physically not possible to even get a setup right now. So we'll see what we get in the next macro. So we're just going to be patiently waiting. All right, yeah, cool. So gonna wait for the second macro now. So we've now taken Asia highs and ES. So let's see what we get. The next buy side liquidity level that price could potentially be going to target is 22065 or 22019. Yeah, 22019. So let me mark that out real quick. We do have an unfilled 15-minute right there, 15-minute bearish gap. So for the sake of today's live, because obviously Cav, I know you're new, so I want you to really get the full breakdown of what it is I look for in my whole thought process going over the trades. But I would preferably not want to speak as much, because once everyone knows what they're doing, then I'm just locked in with the trades. And then the one-to-ones is where I'd really spit the sauce, if that makes sense. Because I want to be locked in, obviously, with myself, but I don't have a problem explaining it all because it is fun. But I wouldn't want to do it every single day because my mouth is as dry as a desert right now. So I'm gonna go grab a jug of water. But yeah, I'm gonna mute my mic for now until for around 30 minutes till this next session, where I'll be back on at around 3. I'll hop on at 3. Well, I'll just be here in it, so I'll unmute my mic when I'm back. All right, so love. looks like it's only me and Nathan in the live right now. So it looks like it's only you and me in here right now, but currently there is nothing to take if Rowan went to the gym. Rowan, if you're hearing this, you're an absolute pussy, old mate. Gotta be here for all macros, then go gym. But anyway, so the next buy side liquidity level would be 22018. Until then, I mean, if we get a model for shorts, then we'll obviously get it. This right here is looking pretty clean. Yo, Cav, what's going on, bro? So currently, we're getting a really clean 2022 unicorn model. So a unicorn model is basically what we got in the first AM as well. So it's basically where you get a sweep of liquidity. Oh, what the fuck is this? Hang on. You get a sweep of liquidity. We come down, so that forms a short-term high. It takes out the short-term high, displaces lower, leaving behind the fair value gap paired with either a breaker or a mitigation, taps back into that gap, and then you look for shorts, which is exactly what we got in the first day of macro, but we got stopped out break even for the sixth time, which is crazy. But you know, six potentially. I mean, if we would take it, it really depends on how you look at it. So a lot of them were, if you had just remained your TPs exactly, your TP and stop loss exactly the same, most of them they all would have been losses. Well, no, 2 would have been wins, 3 would have been losses. But it's all about that risk management. But if, let's say you close your TP for a 1-to-1, then that's 6 wins in a row because they all hit break even. So if you take your TP at the first low, then that's 6 wins in a row. But obviously that's not what I do. Everyone trades different, but personally, that's just how it is for me. So we'll see if we get anything in the second AM. At the moment, we just had, so in between the macros, right? So you obviously have the main model, which forms potentially in the first AM, which is what we got. Then in the second, in between the first and the second macro, price usually does this. It accumulates orders. It either accumulates or manipulates to a next level. So in this case, I mean, it took out Asia highs during the macro, but we just had this chop, this absolutely disgusting price in between. But that's completely normal because now, as we come into the macro in 1 minute, we should start to see either displacement lower or price continue to go higher and go for 22018. But currently, we're inside of a 30-minute bearish fair value gap and a 15-minute bearish gap. So that, along with a lower time frame model, following our daily bias, which is still bearish, and we've swept Asia highs and London highs. So following our biases and all the confidences, if we get displacement lower, which is clean, leaving behind a fair value gap paired with a mitigation or a breaker, then we shall get in for shorts. But if we do get displacement, we'll be trading back into a 5-minute bullish. So does anyone remember what I said about trading into a 5 or a 15-minute bullish gap? Would that be an A plus setup or a B plus setup? And depending on which one it is, are you going to be using full size or half size? If anyone can remember that, that would be banging. But yeah, currently we're just, again, like I told you guys in the first macro, patience is key. Just want to wait for the model to play out. Be patient for the model. If this was to if we were to get exactly nothing as to what I wanted to see for 3 weeks straight, I wouldn't be taking a trade for 3 weeks. Even if price is just moving really nicely to the upside or really nicely to the downside, but if it doesn't present your opportunity, then you're simply not going to trade. It's all about patience and waiting for your model. Someone else may be trading some crazy supply and demand and hitting trades day by day, but that does not mean that you should be winning as well. Well, not winning, but does not mean that you should be taking trades as well just because they are. They trade a completely different strategy, and in 1 month they may be winning and you're getting break-even trades, and the next month they may be losing and you're winning. So it really does vary because everyone's results are different. I mean, there's someone in the group in my Discord that trades I think they're in the free group as well, that trades the exact same model as me. So I taught him the model, but obviously because he's not in the live, he's not taking the same guidance as me. He trades by himself, but he took longs where we took shorts, and he got stopped out. We also got stopped out at break even, but our trade was the correct trade to take in my opinion, and he would have lost on that trade, and we got stopped at break even obviously, but yeah, that's what I mean by everyone's opinion is different. Even if you trade the exact same strategy, everyone's bias, direction is completely different. But obviously in my opinion, from the way I was taught, this is the correct way to trade this model to the highest probability. And also for everyone watching, this will go in the live streams tab on my YouTube channel, so obviously you guys get to watch it live, but then it'll become public. Just stretch it. It'll become public after it's done. So yeah, Nav, I saw your message. So basically, you take 2 trades a day, right? Because we took the first trade, which was in the first day macro. If you go in the group, you'll be able to see that trade, and it was a break even. It was sixth break even, and you now waited for the second macro. So we're inside the second macro, and you get one more shot. So you get one more shot, and that does not mean that we take a trade inside this macro. Just because we have one more trade left does not mean, or you take 2 trades a day, does not mean you should be taking 2 trades a day. Ideally, you should be taking 1, because then it's 1 win and you're done. You don't take anything more. But right now, what we're looking for is a displacement lower. But at the moment, we just see price chopping about. This price action is absolutely disgusting, and potentially going higher. But we're just waiting now for a displacement lower, and we'll see if we do get it or not. So there's nothing much to really talk about here, apart from the fact, I mean, I could run over things again, but you guys can just watch this back. And then we'll also have our weekend backtesting session. So on Saturday, I'll figure out a time where it's most convenient for everyone, but we'll do a 1-2 hour backtesting session going over the week, and it will just be going over everything. Wait, please tell me my mic is on. Oh, thank God. Wait. Oh, okay, it is. Okay, good. So yeah, we'll just go over everything during the week, and it'll be a good chance for you guys to learn, and then we'll all be able to speak in that as well, so that'll be pretty cool. Alright, so right now, we could potentially be seeing a displacement lower. But as you guys know, a valid displacement has to be the candle closing below. So as of right now, if price was to close like this, it would be not a valid displacement. Because when displacing through a short-term low, the candle has to close above. But at the moment, all this is a sweep of a short-term low. It's not a displacement, it's a sweep. Because a sweep can consist of the wick touching the low, but if the body actually closes below the low, then it's a shift. But that does not apply for in terms of like a short-term high. So even though we've got this candle closing above the short-term high, I mean, this is the valid short-term high now. so we just tapped into that 5 minute bullish gap. So if we were to take shorts, this is a B plus model, so I'd be taking it with half size. And I won't be taking shorts if price comes down and takes this low. Okay, so we have got a displacement. However, we have no fair value gap to enter off of. So if we had come lower and we had a gap here, this would be a valid short because we have a mitigation paired with a fair value gap, but this gap got closed up. There's no gap on the ES. There is no trades to take here. So we're going to remain patient and see if there is anything potentially to take. Ideally, what I'd want to see is price come back up, accumulate a little bit, build some structure, and then we get a model. Because at the moment, what it looks like is we're just accumulating and building structure. It's going to come lower, potentially higher again, and then we get a move to look for lower prices. But we've come to 30% of this bearish fair value gap, so you guys can see when marking out a fair value gap. So this is the 30-minute gap. Even though there's a 15-minute here, you want to mark out the highest time frame of that gap. So in this case, it's a 30-minute, and in this 30-minute, you use the Fibonacci tool to find the 50% retracement, and you drag it from the high to the low of the gap, and then this would be 50%. Wait, hold on, I don't think I've done that right. Let me just put it there. And okay. Can't even see, there's so many lines on my screen, I need to clear it up a bit. But yeah, you can see how we've tapped the 50% range of that gap, and we're now moving lower. So you could potentially take shorts there, I guess, but it's not very high probability. Some guy literally took shorts as soon as we tapped into the 15-minute gap and would have got absolutely demolished. Never to be seen again. So yeah, this is what I wanted to see. I want us to come back up a bit higher because I don't want to come too low. Because like I said, if we take this low here, I won't be taking shorts. So this will be like a sweep of minor sell side. And what minor, so obviously we have like Asia highs, London highs. So that's like major buy side liquidity because that's session highs, session lows. But minor liquidity is liquidity that's been formed in the previous 1 to 2 hours. So you guys can see this low got formed around 20 minutes ago. So this would be a level of minor sell side liquidity. So yeah, currently right now, there's nothing really much to talk about. So I'll mute my mic temporarily. But you guys can see now how we're moving higher. However, ES is lagging a little bit behind, but this is exactly what I want to see. So I want to see us, we've now come back up. I want to build a little bit more structure, then get displacement lower. Because if we come too low, and like I take shorts here targeting this low, whoa, what the hell just happened? If I take shorts here targeting this low, then the risk to reward is just absolutely, bro. You'd be, if you were targeting your stop loss, you'd be making more. Do you see how terrible that risk to reward is? So I want to be getting something that looks more like this than this. So let's see what we get. So I was going to say there's potentially a short here, but that gap's now just been closed up and there's no position to take here. Also, it's not the highest probable. We didn't really get a pair with the breaker because this high hand got swept. So yeah, there's nothing to take here, bro. There is nothing to take here. If it continues like this, it's likely we'll have to trade the PM session. See what bear price action we have there, because we had PPI and CPI earlier. So that means that there should be decent volume in the PM session. But like odd days on Mondays where there's no news and it's just dry, because obviously Monday is just known for being Mondays and Fridays are known for not having the best price action. Doesn't mean that it isn't going to be good price action, but trading PM on those days with no red folding news earlier on in the day is not the greatest idea. So in this case right now, if ES was to come down and then take out this point of sell side as well, that would mean we have a bullish SMT, and then I'm definitely not taking shorts. It's likely just retracing lower to then target higher. So what I think is going to happen is I think we'll move lower potentially, and for the PM session I think we're going to go up and take out 22018. Or we'll come down and take out the New York Open price, but that is a far way down. That is a long way down. The next point of sell side would be this low right here at 21840. So I mean the PM session is quite far away, so we'll have to see. But obviously we're not going to write off the session just yet, because we still have 15 minutes, so there still could potentially be a trade in here. We've just taken out this short-term high now. But if I was to take shorts now, it would have to be, we'd have to target, I mean, we'd have to see what the risk to reward saying. But at the moment, it's just dead. Nathan, did you take that short in the first macro? Did you take it, or did you not get involved? Oh, you did take it. You got stock to break even as well. Yeah, break even, yeah. Yeah, that was a clean setup. That was clean. Perfectly followed trade. I was really happy with it, actually. Yeah, break even isn't great. It's not a loss though, is it? So a lot of people would have got absolutely demolished in that. So seeing as we're pushing higher, everything that's not a W piss me off. Can't lie, I need to try to stay calm for real. Yeah, that'll come over time. That's pretty normal. But the quicker you really try to get that down, the easier it will be. So definitely just watching the streams with me will help. The way I improved my patience was literally watching Milo day after day. Like I watched him until he stopped the streams like 2 months ago. I watched him for a straight 6 months, and then even remember when we were on session, I told you I literally watched all of his lives in his um, YouTube live panel. I used to literally, before I'd go to bed, I'd watch a whole live stream just trying to practice his patience. So everything I'm doing right here is exact replica of what he used to do. Well, still does, but when he was on stream, the patience and everything just... Yeah, just staying calm and really... I think the worst part about it is when you see like other people... My biggest problem was seeing other people winning, and then say if I was break even on the day or I'd taken a loss, I'd be like, damn, I need to take a trade right now. I need to win. But I guess in general for you, it's just you just want to win yourself, which makes sense. I was the same. But the quicker you kind of, I just want to pass funded, yeah. I do hear it, bro. But it will come. Honestly, bro. It's your first funded. It's your first ever one. One of these break evens will eventually pay off. So imagine, right? So you just gotta think of it like this: 6 break evens. If you had taken if 6 of those break evens were TPs, you would have passed the funded by now. So you really just gotta trust in the model. I mean, a lot of them should have been wins. It's just my fill was absolutely terrible, like my entries. So you remember I spoke about it with you, fixing the entries, 50% retracement, or physically being disciplined and not touching the button until it taps NQ. Because some people, they would have seen that it tapped ES, so they would have got in for shorts, but the fill on NQ was absolutely horrendous. So you just got to wait for the gap to come back. The price to come back to the gap even. And Navla, if you were here in the first macro, you would know what the hell I'm waffling about. Ugh. Get your head in the game, Shan. You gotta be here for both macros, both of them. Every day, shot for every single macro, then go gym. Or go gym in the morning. Gotta sort it, bro. Because you're just seeing this shit price action, having no idea what happened in the first. But the first macro is more important than the second, in my opinion, because you'd be able to see the thought process of how I approach price, what the different levels were that I was looking at, and the patience of waiting for the model. The model played out exactly how I said it would. So you can wank in 30 minutes between macros if you want as well. Yeah. Yeah. Go cheat the thing. I've got some call on the weekend with this company that want me to potentially live stream for them for like $4,000 a month, 3 hours a day. But if it's not like anything up front, there's not a chance I'm doing it. So I have to see. Yeah, on TikTok on their page, but if I don't, I'm not doing anything. I've got loads of things about like promo for their firm or something like that for a lot of money, like good money. But you don't want to sell your soul, man. You want to protect your brand and your reputation. Because if I'm just selling my soul for a few racks, like I want to build my own brand, my own name, and have everything in my control, not someone else's control. Because then I may as well just go work in my local chippy. So if I don't get anything up front, I ain't doing this for them. Because then I just know they're not serious. The amount of firms that have come up to me and be like, oh yeah, promo our firm, we're the next up and coming thing, this and that, and I'm like, yeah, but are you though? Are you really? I literally I live streamed one of them. I've recorded it. I've tried to dig it out another time. It's pretty funny. It's not working the local GP. Yeah. So there is a displacement on ES here, but there's no displacement on NQ. And there's no mitigation either. No mitigation, no breaker to be paired with this gap. If there is one. So not a chance I'm taking it. Needs to build a bit more structure. If price moves exactly how I want it to, we'll get a setup in this before the end of macro. But if it doesn't, then we're going to be waiting for the PM session. Which is 6:45, 7:15. was actually watching your first lesson, Nathan. The other day I went back to go watch it, bro. It was so like wholesome. How beginner you are, so newbie. But you were gassed though. You were gassed to start. Same with Navlar now. Navlar's got cook up. Got lock in. Can actually learn fast as well. Yeah, I mean you were actually putting in the hours. To be fair, I haven't got any other student that's worked harder than you. To be fair, so obviously you saw the results faster. Mate, wait till we go Malia. I mean Nathan's going Malia before us, but I'm packing up the setup. Well, I've got my spare monitor, which I don't really care. If it gets smashed up, I don't give a fuck. So I'll pack that up. Get the laptop, mate. The setup, the mic. It's gonna be nutty. Nav, our room's gonna be a fucking. It's gonna be a bands machine. Bands. Yeah, Nathan, you gotta let us know if it's a sausage fest in there, bro. When I went last year, there was actually a lot of girls. Like, it seemed like there were more girls than guys. To be fair, which is good for you, man. Not me. I'm wifed. I'm wifed up. The vlog's gonna be crazy though. But I'll still be doing the streams as well. I'll do the streams whilst I'm in Malia. Still gotta stay locked in. By the sounds of it, last year more man went. Well, but I actually went though. I actually went. It looked good. It did look good. There's level at 22021 on NQ 30 min level. Maybe it's reaching for that. 220321. Yeah, that's what I have marked out. 018 is probably near enough. I think it will reach for that. There's no trades in it, bro. I'm gonna get better women in Malia. I've been learning Greek game. Oh yeah. Oh yeah. Come on, Chan. My good. If there's no CCTV at Villa, you may have some nights on the sofa. It's like, yeah, nah, it's cool, man. As long as the bitch don't go near the fucking trading setup, it's all calm. My car supports the cause. You already know, bro. You already know. Alright, guys, there is nothing in this macro, so I'm not gonna bore you. I'm not gonna stay on here any longer. You guys get on with your little days, and then we'll hop back on for 6:30. 6:30 we'll hop back on, or like 6:20. We'll jump back on for the PM macro, and we'll see what we get. So in the meantime, I'm gonna hop off, get the reels sorted for the first trade, and then we'll see how it goes. So safe, you man, safe, love, and I'll send the link to this live in the group as well.